All right, let's do this again. All right, so what I want to discuss this week is I already did tweet about it. I don't know if you follow me on Twitter. Um, is that the majority of the indexes, some of them are in correction mode. And then you can see that I put a couple lines here, and then you see that if you've seen a couple of my videos before, you know that I try to, in my style though, I do swing trade, if you don't know by now, and I do I try to I try to simplify my trading when I teach. Okay, I learned swing trading. I've been trading for over 10 years, and then it took me a long curve, and I paid a lot of tuition for it. Anyway, I try to, when I teach somebody something, I try to keep it as simple as possible. You know, a couple moving averages, and then price action. That's the main thing for me, and volume usually. Yeah, and a couple like, and I don't use any indicators and all that. It's gonna mess up your judgment. So moving average, 21 moving average, 15 moving average on the red here, and then you see that I'm adding it here just for a Fibonacci retracement, and that's it, and trend lines, and mainly, like I said, it just price action. S&P, we did move from here to here, and then as you can see that we violated actually the 21 moving average, which is the green line, starting this date, and then we closed above it, below it one day, and then second day. For me, and I said this before, like I said, go back and watch a couple of my videos. If the stock start breakout, if stock breakouts or whatever, and then it did move, and all of a sudden starting to close, start acting weak, starting to close below the 21 moving average, for me that's an act of weakness. If I switch back to the QQQ, you will notice that the stock did already closed below here one day. So that should be actually your red flag, should be your first indication. I do use 8 moving average as well, and you can see it here. Sometimes that will guide me as well, but you can keep just like 2 of them, and they should be fine. And I did urge all the time on all my videos. I always tell you guys to change the time frame, and that will improve your reading skills when it comes to charting. And you can see that after this move down here, we kind of double bottomed here, and then we went up, and then went up basically here, and then we flagged here, and then we have this good candle, breakout candle, and from there we actually moved all the way up, all the way, trying to actually we kind of like testing the support of this all-time high. Now the reason, if you go back to the reason and why we were having this correction, you will find that it's because, let me see if I find it. It's actually, it was on the news based on CNN. It says that stock sinks after historic U.S. credit rating downgraded. To be honest with you, like for me, I don't really care about the news. I just look at the price action, and it tells me a lot, because I've seen, and I bet you agree with me that you've seen some stock, when stocks sometimes on earnings they gap up on the bad earnings, but it's all about the expectation, not what the news are. I did some research, and I found that back in time, so if I switch this to 3 days instead, you will find out, and then if you do some research, you'll find out that the U.S. credit got downgraded back in August 5th on 2011. And I did actually right in here, what is it, August 11th. It was right in here on this date. So this is like 3 days. I move 3 days. Every candle here is 3 days. So basically it was like basically right in between here. So we had a correction. So at this time, the U.S. credit got downgraded as well from AAA to 2A plus. That's just like news, and it doesn't matter for me. It's just whatever the news are. I always pay attention to the what price action is saying. So and you can see here that after actually a move, this is after 2008 crash, we moved, and we had a correction here, and then we moved again, and then we kind of corrected. So what I'm saying, what I'm expecting from me is, so since this is QQQ, since we did actually reach close, we got close to, like, what is this, about like 6% from all-time high. I was expecting that the QQQ or and other like S&P, for example, they just not gonna cut through the all-time high like a knife through butter. It's gonna be some consolidation, and you can see if I go back to QQQ, you will see that actually we do have like we're basing right now, so that's like a base, a cup, and then you probably gonna put a handle here before we make all-time high. My long term is bullish, and my short term is right now. It could last for a couple of weeks, it could last a month, it could last 2 months. So that's it's bearish. That's what I really want to emphasize on. So this is what we can actually pull back all the way to the, we can pull back probably another 5 or 10% from here. So who knows what's going to happen. So if I switch back to the weekly, you'll see exactly what's happening. We moved. Now we have this engulfing candle here on the weekly, and that's why, like I said, I always urge you to look at the chart in a different time frame, and it will tell you pretty much a story if you know how to interpret those candles. Switching back to S&P, you can see the same engulfing candle. So that's anticipation that the next week or weeks gonna be kind of pullbacks. And I always, when I do research, when I do analyze the chart, I'm always, even though like my long-term bias is going to be bullish, but anything can happen. Anything can happen. I was going to discuss something here back in the weekly. Let's go back to 2011. I want to show you something here. 2011. So if you go back here, let me switch it to, like for example, let's switch it to 3 days. I want to show you something. 3 days, what is it at? It's over here. Yeah, 3 days. So I was looking at the chart, and then you can see that we kind of reached, we actually moved on a SPY quite a bit, and then it was time for the stock market to actually correct a little bit and consolidate. So what happened is, so this is what you want to pay attention to. Like, we did actually double bottom. Most of the time we'll triple bottom, we'll double bottom, and then the market will start to make higher lows. So we put a higher lows here, and then we broke out here, and then you can see that if I move this back a little bit here, you'll notice that the chart is acting weak. If we're looking at it from this perspective right now, you'll see that this is weakness. Okay, and then you always, when you analyze the chart, you always say, if we break this line, this is what's going to happen. If this happened, this is what should happen. If this happens, should happen. Always stay unbiased. Anything can happen. Look, if you were unbiased, and then back in when the crash happened back in 2020, that quick crash, you will be out of the market very, very, very soon. So you'll notice that the market was acting weak here, and then if you would ask me back in here, and this time I'll tell you this is not looking good, but at the same time I'll tell you this is just only a retest. So you break out and then you retest. So the moment, so every time like you'll say, okay, this is retest, but where is it gonna stop? And then every time like if we violate this low of that breakout candle, either this one or this one, that'll tell you that, hey, we're gonna probably move lower and lower, and then so forth and so on. But if you just keep following the price action, you'll notice that the market has something else to say. Don't never predict anything. Just let the market do its thing. Put a stop loss. You analyze it. It could work. It could not work. It's not gambling, but you have an educated guess better than a lot of people. You know, they're just putting your money and then you hope for it, and you smoking hopium, and you think it's gonna go up. So my thing here is. My expectation is like at least we're gonna probably move, like I said, 5 to 10% move below it, so that will make it probably a handle maybe here. And like I said, we did have a we kind of based here on a SPY, and then and SPY and QQQ. But again, if you notice, I'll urge you always to look at other indexes like composites. Same thing, we're making a base, so that's okay. We can pull back away from a little bit closer to 21 moving average. Every time we stay away from it, there's always that bend effect. It has to come back. It cannot stay away from whole moving average, 21 moving average. Look at the Dow Jones. It's all, most of them, like all of them, I will see that switching back to the daily, they're all like an uptrend, which is confirmed like a long-term bias of being bullish. S&P, SMH, even though they are below the 21, they're still looking bullish. XLF, it's even acting even better than the other two. XABD, Composite, Dow Jones. So that's my analysis, and that's what I'm thinking it's gonna happen. And next thing I want to discuss is if you have any stocks or anything, I'm sure some of the stocks. What I want you to do is like you can look for stocks that in this actually pullback. Especially on QQQ. Why QQQ? Because if I switch back to this is how I actually look at which sector is doing better. You can see that number one by the years up here that the technology sector is doing way better. If you don't have my chart, you can always go back to finviz.com, and then you can go to head groups, and then look at for last couple of months, which is basically, this is half of the year. You see that technology was number one, and then communication, and then consumer cyclical. And then you'll see that 3 months again, consumer cyclical and technology, they were up. So that's actually where you want to focus and find stocks, because you'll find other stocks in different sectors, they're gonna move higher, but if you want really the leaders, you wanna focus on who's moving fast, where the money is pouring. And then, so that's exactly what I found on TC2000. You'll see that technology is number one, consumer cyclical number two, and then industrial. And then you go from there, you just click one, and then you keep going. So if you have any stocks or you're looking for stock, especially right now, look for stocks that actually, they're going just sideways, okay? So the stock is pulling back, QQQ is most of the stocks pulling back to the 21 moving average, but some of the stocks are just going sideways, and those are the ones going to be pushing even further higher and higher and higher. Okay, for me, I just base my I try to keep it as simple as possible. I base my my screener based on relative strength. And so if I switch back to this in here, and if I want to look at the technology sector, when I hit filter here, based on relative, this is my based on my characteristics on relative strength, these actually came out on my screener. So let's go to seeing a couple of them, how they look like. We have AAI, this is applied. This is actually my first time looking at finding this stock. If I switch this back to weekly, and I always do this, I always switch back to the weekly so I can see what's happening. You see that we had a support here. Finally, the stock broke down and then came back. So, and this is really right in here. This is actually with this candle here and this much of volume. This is really bullish, and it's only $11. So if I were you, I would keep this in my watch list. Going back to the daily, I wouldn't buy it here, to be honest with you, because we're getting close to all-time high, and the stock already moved. I don't know how much it did move. It did move 67% by Friday. This is way too much. What I would like to see for the stock is going down, digesting some of this candle. If it's gonna be weak, it's not gonna fill this gap. If it's strong, it's not gonna fill this gap. My bad. So I would love to see it consolidating here and then break all this time all-time high here. And look at the stock. Since the break out from this base in here, the stock actually moved over 300%. Oh, it's 358 in about a month and a half. That's a lot. So I don't know if you treat stocks below $20, but I would definitely keep this stock on my watch list. Going back to the rest of the stocks, let's go back to the technology sector. So you have SMSI, and this is what I meant by some stocks going down, especially at this correction mode, and some stock is just like going sideways. Look at SMCI. It just like acted like nothing is happening. So that's showing relative strength. That's a good stock that you wanna keep. You're telling me it's $300 already moved. No, it can go to $1,000. Who never like think of it like, oh, it already did move. No. VRT is another one. Look at the stock. Put this on a weekly. First thing I always do, put this on weekly. Stocks break all-time high. Look at that. It's only $35, and it did move from here. This is back in late April to now, and it did move like what, 159%. That's a lot. So I'll definitely keep this on my watch list, especially after a gap. Especially after a gap. Always, guys. I do have a screener actually on FinViz, and I don't know if I did share it with you. If you want it, I can share it on a special video. If you want me to, just comment below and I'll share it. Always pay attention when stocks gaps, especially over 10%. When stocks gaps 10%, this is like 30%. When the stock, what does that tell you? Like, very simple word. When stocks gaps 30%, that means there's a lot of demand on that stock. So you want to really pay attention to it. You can really, if you follow this screener, like when stocks move on a volume, like here, and then it gapped with over 10%, man, you want to keep that, and then you want to keep it on your watch list and just trying to get in any when it forms like a, I don't know, you can wait for it to like make all-time high here again, and then you can buy it and put a stop loss right below it. Now, usually I put stops only like 7 to 8%, so that's the way I usually do it. FSLY, look at this. The stock was really up here. It diminishes, and it lost most of its energy and came back again, made a base here, and then again it's breaking out. DMRC is not a stock. It's coming back to that test or let. Reali, I think I had this stocks before I bought it. I think right in here or something. As soon as it starts. So this is what another point I want to mention to you. I don't want to make this video too long because I did discuss some of this stuff before. But if you want me to do it again, it's just going to be a little longer, about 20-minute or 30-minute. When the stocks usually break out or so out of range, for me personally, this is me based on my previous trading experience. When they start into acting weak, and what does that mean? They starting to close below the 21. Especially, sometimes it happens only one day and then they keep going. But sometimes when it happens first day and then second day, third day, for me, it indicates that next couple of weeks to months, 2 months, stock wants to consolidate, especially after it moves. So we moved from here all the way probably to here. That's 51%. You don't think the stock wants to digest? Stock is not going to keep going all the way after it has to digest some of those gains. So it's a cycle. It's how stocks usually move, and you need to understand that. If you don't understand that, you still need a lot of learning. As soon as it's starting to close below the 21. So look what happened. Basically, didn't even move. So from here all the way to here, that's about like almost 3.5 months. Yes. So, and then all of a sudden the buying started again. Probably this is after earning, and then he wants to move. So yeah, another one, ZG. That's Zillow. Zillow again. No, this is different. This is Zillow and this is Zillow. Anyway, EXTR is not a stock. So it's acting better than majority of the stocks, acting even better than the sector, Yelp and some other stocks. Anyway, so that's what I want to say. I hope I wasn't too long. If you find any value in this video, please press a like. Help me move the channel higher and higher. And then all I want to do, I just want to help you read the charts better. It's my passion. I love it. I spent a lot of time just looking at like hundreds of stocks. And if you need anything, just comment. I'll try to do a video, even though I do really have a busy schedule. I really want to all of this, like I really want to give something back to the YouTube, even though like me back in the day when I couldn't find anybody, like all I did, I found like a bunch of courses that I really have to buy, and there's nothing free in the market, and that's the saying. But I had a promise back in time, and I said if one day if I try to figure these things out, I'll try to give as much as I can for free, and then hopefully with these videos I help you kind of find value. All right, hit that subscribe button, comment below if you want me to cover anything or cover a stock, and I'll see you next time. Bye bye.